Hello there traders, my name is Elizaveta Belugina. I'm the head of analytical department at MPS, and today is our usual presentation, our talk about the outlook for the main Forex currency pairs, the outlook for the next 4 days, which will end on Friday. So let's have a look at the presentation I have prepared. Here it is. As usually, we'll talk about market positioning, economic events, some technical stuff, and then we'll summarize our trade ideas. At first, I'd like to draw your attention to CFTC data for the past week, the week which ended on Tuesday, January 24. And here you can see on the left, there is a histogram of the aggregate US dollar position of the large speculators. And looking at this histogram, we can see that there was a rather big decline in the overall bullish US dollar position. The decline is really impressive. It was a decline of $4.8 billion. And this is actually the lowest level of the US dollar net long position since the US presidential election, which took place on November 8th. So I think that these developments we are currently seeing on this chart can be very, very important for traders, and really they can mark a top in the US dollar. We should remember that the US dollar was rapidly strengthening after Donald Trump was elected US president. There were expectations that he will increase fiscal stimulus, and this way he will make US inflation increase, and thus the Federal Reserve will have to raise interest rates. This was the main bullish driver of the US dollar in December. However, they see that at the beginning of this year, as Donald Trump has actually become the US president, such expectations are no longer driving the currency market. On the other hand, there are some doubts that Trump will actually introduce these measures, or if traders agree that he will do so, they know nothing about the timing of such steps. As a result, the market players, the speculators, tend to close their US dollar long positions, and we find this reflected in data provided by CFTC. We use this CFTC data to track some important shifts in the market, and although something may change here, US dollar still may return to a bullish trend. Still, I think that it is an early signal that we may see a top in the US dollar. Now let's look in greater detail about changes in positioning of other Forex main currencies versus the US dollar and versus other currencies. It is worth noticing that this decline in the US dollar long positions was reflected in the increase of in the decrease in bearish position in the euro and Japanese yen. So this is how the situation changed. The market players went from bullish position on the US dollar to closing their bearish position on the euro and yen. So these were the two main currencies where we had this impact of the weaker dollar. So traders decided to close their bearish bets against the euro and Japanese yen. Still, we can see that the euro net bearish position is still the largest among these currencies. Then there is a sizable bearish bet against Japanese yen, although it has decreased during the past week. There is still a rather large position against the British pound. We can see minus almost $5 million in total, this position. And we can see that there were some swings in commodity currencies. For example, Canadian dollar went from the bearish territory into bullish territory. We now see net long position in Canadian dollar, and it is for the first time since September. Australian dollar remains the biggest bullish bet versus the US dollar, and New Zealand's dollar is still in the negative territory. Here we have still have the bearish position, net bearish position, though it has somewhat contracted. Overall, the trend is said to be neutral here. And I'd like to point your attention to the big bullish position we varies in gold. And if we have a look at the market of gold, we saw that traders start to fix this bullish positions. But we'll see that later when we look at the chart. Now, I'd like to point your attention to the US dollar index chart. And I think it is worth looking at the weekly chart and at the daily chart as well. If we look at the weekly chart, we can see that last week the US dollar index managed to close near its opening levels. So we got this hammer-like candle, and as a result, this week, at the beginning of this week, we see a kind of rebound. And the daily chart shows us that the resistance level to focus in for the US dollar index chart is levels around 102 mark. Here is the resistance. All in all, on the daily chart of the US dollar index, we can see the bullish engulfing pattern, and I think that technically the indicator is perfectly capable to reach 102 mark, but then it will have to face a serious obstacle, and the ability of the US dollar to continue movement to the upside will depend on its ability to get above 102 mark in the US dollar index. If we have a close above 102 mark, then our next targets will lie around in the area of 103 and 104 even. But if the US dollar fails to settle above 102 mark, then there will be a chance that we'll get another high in the area of 102, and this may lead to the formation of the head and shoulders pattern, and you perfectly know what this pattern means. It means that it is a big topping taking place in the Forex market, and a reversal to the downside will unfold with the US dollar index aiming to 98 area. But we will have to wait and see just how the situations develop if we are talking about the technical picture for the US currency. And if we have to speak about American fundamentals, we should know that the picture for American currency is kind of ambiguous. On the one hand, last week, the US dollar was supported by a strong stock market and rising treasury yields. And this hopes that Donald Trump will deliver a stimulus plan have once again increased. They are still present. They are, I would say, wavering from day to day, but still these hopes as a factor should be taken into account. On the other hand, protectionist policies of Donald Trump raises uncertainties for global trades. And investors are especially concerned by Trump's intention to build a wall on the US-Mexican borders to reduce illegal immigration and even introduce 20% tax on goods from Mexico to pay for the construction of this wall. Of course, such trade protectionism isn't good for global trade, and it creates fear for the future development of the global economy. And this fear, this risk aversion, surely makes investors seek some refuge currencies, refuge assets like Japanese yen and Swiss franc. So this is not good for the US dollar. So you see, we have two different sets of factors, and they all are centered around Donald Trump's policies, which are kind of unpredictable. And the thing is, the dynamics of the US dollar will largely depend on the fact whether Trump will manage to achieve his growth targets and present the stimulus measures, which will be enough to outpace this negative sentiment about the US economy, which is created by his trade protectionist steps. If we are talking about the current week for the US dollar, it is full of different events. One of them is the meeting of the Federal Reserve on Wednesday. No changes in the central bank's monetary policy are expected. And I should remind you that last week, the week before last, actually, the Fed chair Janet Yellen said that she can't be precise about the timing of the interest rate hikes. It is not a very hawkish comment. It made the US dollar decline and visit levels below 100 point for the US dollar index. But currently we are seeing some recovery. Next week will be also packed with the US economic calendar. We will see some consumer confidence on Tuesday, ADP non-farm employment change and ISM manufacturing PMI on Wednesday, and non-farm payrolls and ISM services PMI on Friday. In addition, it is necessary to underline that US economic growth for the fourth quarter, the data were released on Friday, slightly missed the expectations, and it can certainly make the Federal Reserve more cautious about its future policy steps. So although the Federal Reserve is not expected to change its monetary policy, it's still very interesting what the FOMC statement will consist of this time. So, of course, traders won't be able to ignore this thing. Here I also have important economic events, not only for the United States of America, but also for other key regions and countries. And let's have a quick run through these events. On Tuesday, tomorrow, there will be a meeting of the Bank of Japan and the press conference of this regulator. And as we are speaking about the Bank of Japan, we should note that no changes in monetary policy are expected as well. And actually, it seems that currently there is no need for additional monetary policy easing. And this may give the Japanese yen some sort of strength. Japanese inflation turned out to be slightly better than expected in December. Core CPI gained 0.3% versus the forecast increase of 0.2% on the annual basis. And we may see the Bank of Japan comment on that and some other economic improvements which have taken place in Japan so far. So there is still improvement. I don't think that the Bank of Japan authorities will like to make Japanese yen stronger, so they will probably try to underline that still there should be many changes for the Japanese economy ahead, and it still hasn't reached the desirable levels of economic growth. So they would probably try to underline some negative things about Japanese economy in order not to make the Japanese yen strengthen much. Other events include two speeches from the ECB President Mario Draghi on Tuesday and on Thursday. A recent meeting, the last meeting of the European Central Bank, was rather dovish. Comments of Draghi were dovish. Not much has changed since then, so maybe the European Central Bank will continue undermining the recent increase in inflation. Today there were also some dovish comments from the ECB officials, and it created negative pressure on the single currency. So I don't think that Draghi is going to sound bullish and help the euro. Also, there will be flash inflation data for the euro area on Tuesday. This is important in context of the ECB policy and the euro. There will be a preliminary flash GDP of the euro area for the fourth quarter. There will be Canadian monthly GDP, US consumer confidence, and employment change and unemployment rate in New Zealand. This is Tuesday. On Wednesday, we'll hear from the Bank of Canada's Governor Paulos. There will be Chinese manufacturing PMI, an important indicator for the market risk sentiment. And here we should note that this week Chinese markets are closed because of the Lunar New Year holidays, and this leads to the fact that the amount of liquidity during the Asian session is lower, so movements during the Asian session and during the release of Chinese manufacturing PMI will be more volatile than usual, so you have to be cautious about that. It is also the week of releases of the UK PMI. There will be manufacturing PMI on Wednesday, construction PMI on Thursday, and services PMI on Friday. And it is also a week of release of the US labor market data. And have a look at the ADP non-farm employment change on Wednesday and US NFP on Friday. Traditionally, these releases provoke great volatility in the Forex market, and this time there will be no difference from this tradition. And I think that we'll see a lot of volatility, especially in the euro dollar and US dollar, GBP and currency pairs. And other important event is another central bank meeting. It is the meeting of the Bank of England on Thursday. And of course, this meeting is extremely important. We will have the Bank of England's inflation report, and also we will have the speech of the Bank of England's Governor, Mark Carney. Here, as well as the Federal Reserve and the Bank of Japan, no one expects the Bank of England to change its monetary policy at this time. And we don't expect the head of the regulator, Mark Carney, to say something that would make the pound gain much. A strong pound is not in the interest of the UK economy. Note, however, that the Bank of England will also present its quarterly inflation report, and British inflation has accelerated during the recent months. As a result, some analysts have started to wonder whether the Bank of England's excessive easing steps, which were taken last year, were really necessary. And Carney may have to answer this question. If he acknowledges the strength of the British economy, the pound will get a short-term boost. But if Carney underlines that uncertainty about the nation's economic future is still present, then the pound will keep snapping its recent recovery. So this is it. This is what we should expect from the upcoming meetings of the central banks. I think that now we should be ready to have a look at the Forex charts. And we start the weekly chart of the euro dollar. We can see that already on Monday, the euro has managed to make a big swing to the downside, to the area of 106.20. Have a look at the previous candle. It was a candle with long upper and sizable lower shadow, a very small body. It is more like a spinning top, a sign that the market is in the situation of uncertainty and the bulls are not really sure that they can continue pushing the pair to the upside. As this candle formed after several bullish candles, here we are seeing a natural reaction of the market and the decline which is taking place here. Now let's switch to the daily chart to see that the pair hasn't reached the top of the daily Ishimoku cloud and hasn't reached the 100-day moving average. They are located in 108-108.20 area, but I still recommend to memorize these levels in case we see some reversal and to understand that this is the levels which would be very difficult for the euro to break during this week and even later. So this is the source of the bearish pressure on the euro dollar. And we can see that on the daily chart, the MACD indicator is declining. It has even crossed bottom upside down the signal line. So the picture here looks negative. We can see that there is 50-day moving average, which is located at 105.80 mark, and the bottom of the daily Ishimoku cloud, support provided also by November minimums. This is located around 105.50 if we don't have to be very, very precise, but it is somewhere here. So 105.80, 105.50 is what we can see from this daily chart. And now the 4-hour chart, it clarifies the picture, I think, for us. We can see that during January, during the 4 weeks, the pair was in the bullish trend, and we can describe this figure, this chart pattern, as a wedge. This wedge was formed after the pair's decline. It was a rising wedge, and as it could be expected, this wedge was broken to the downside. Here I have the weekly pivot indicator. The fact that the pair is trading below this light blue line, located at 107.09, means that the overall pressure on the pair is negative. It has already reached the first weekly support at 106.45 and dropped below this level. The next weekly support is located at 105.92 and at 105.27. So from the previous chart, we can remember that support levels were in the area of 105.50, 105.80. We know that there can be many support levels on Forex market, and sometimes we should be speaking about not exact levels of support, but about support areas. So 105.50, 105.27 is where I would focus. I think that the pair is perfectly capable of reaching these downside targets. We can also try to get some additional information from the Fibonacci levels, take Fibonacci levels of this recent increase. Of course, this way we have just too many indicators on one chart, but still we can see that the 50% Fibonacci retracement corresponds more or less in 105.50 mark, and 61.8% is roughly in the area of 105.50. So you can use Fibonacci levels instead of these weekly pivot levels for your trading. It's just the indicator you feel more comfortable about. But all indicators here, all the measurements say that the euro will test further levels on the downside. In addition, if we try to take the size of this wedge, it is about 28.33 points. From here, it would be even somewhere closer to 104 mark. So targets around 105.50, 105 look perfectly safe in terms of the bear's ability to reach these targets. If there is some bullish reaction, some retracement of the pair to the upside, there will be resistance in the area of 106.85. This is where the pair breached support line, and the weekly pivot level at 107.09. Last week's highs in the area of 107.60 will also act as a resistance here. But I don't think that the pair will go as far as to 107.60. There will be more pressure in the area of 107.10 for the pair to try to overcome. So technical picture is more or less clear for the single currency. The fundamental factors which may allow the euro to get to our downside targets are comments from the ECB President Mario Draghi and probably the EU area's growth and inflation data, which are due on Tuesday. So watch comments of Draghi, watch the data releases, and also, of course, the US dollar side of the things will be also important. If we are expecting that the US dollar index will try to test higher levels this week, then it's pretty logical to assume that the euro dollar in its turn will try to test lower levels. So the picture is more or less complete here as we are talking about the euro dollar. Let's move to the next currency pair, to the British pound versus the US dollar currency pair. And the first look will be surely on the weekly chart. There were 2 weeks of gains for the British currency. One weekly candle, which was not the last week but the week before, was an engulfing pattern, which allowed the British pound to continue growing and reach levels around 1.2670. There were some pretty good data released in the UK. It became known, for example, that British preliminary GDP for the 4th quarter posted a strong gain of 0.6%. And it seems that Brexit hasn't done much to the UK economy yet. So more or less, British pound is feeling okay. Still, we can see that the pair didn't close at its highest point last week, and it retreated to the downside and closed in the area of 1.2550. And this creates some doubts about this rally of the British pound. Let's have a look at the daily chart. Here, the pair managed to break above resistance line, which connected highs of September and highs of December. The pair is trading above 100-day moving average, the green line, and above 50-day moving average, this is the brown line. Also, we are above the daily Shimoku cloud. Still, here the pair has to stay above this moving average in order to retain ability to get higher. If we have a look at the 4-hour chart, we would notice that the pair dipped below 2-week support line, and this decline means that the pair can actually test lower levels. However, until the pound is trading above 1.2430, 1.2415 area, these are the highs of January 5, 6, maybe better on the daily chart. The area of 1.2430, 1.2415, yeah, here it is. Highs of January 5th, 6th, 17th, and 18th. This is the support area. The pound will retain ability to visit 1.2775 and get higher. Below 1.2430, the decline will open the way down to the levels like 1.23. Let's have it marked on the chart. There it is, 1.23. And here I also have the weekly pivot levels. The pair is trading just below the weekly pivot level at 1.2530, and if the pound doesn't return higher, then we'll get to 1.2430, the level I was talking about right now, the maximums of the previous levels. 1.2388, and next levels will be 1.23 and 1.2271. 1.2227, I'm sorry. This will be our downside targets. So the main level, once again, and let's have it in bold, is 1.2430. If we look at the daily chart, someone may take this movement of the British pound, this as an attempt to form an inverse head and shoulders pattern. In my opinion, it still doesn't look very regular. It is more like a congestion of candles, so we can't be sure about that. But still, the reminiscence of the neckline in the area of 1.2430, 1.2415 is what should make the British pound supported and show us the next big step, big swing of the British currency. So as we already said when we were talking about the economic calendar, there will be a lot of data releases, a lot of PMIs, which will affect the British pound this week. There will be a speech of the Bank of England's Governor, Mark Carney, and it will be about his speech whether to discourage the British pound or to encourage it. I think that the risks are for the British pound to the downside still, as uncertainty about the Britain's future still remains, and it is the weaker pound which is helping the British economy to produce such good results. And unless the British pound remains lower, remains below resistance in the area of 1.26 1.2690, then the British economic data will become worse, and I think the Bank of England doesn't want that. So our main scenario is the British pound will try to test 1.2430, 1.2415 area, and probably get lower to 1.23. But if the Bank of England sounds encouraging, if the data from the UK are fine, then the pair will recoil up from 1.2430 and will aim to this high of November 11th at 1.2673 and 1.2690. This is the first weekly resistance level according to the pivot points calculation. So this is our picture for the British pound. Next comes the Japanese yen. We can see that the pair is trading in range between 115.50 on the upside and 112.50 on the downside. By the end of last week, the yen declined as Japanese bonds rose as the Bank of Japan stepped in to buy the debt. The central bank increased the purchases of bonds which are due in 5-10 years. And the regulator aims not to allow the benchmark 10-year yields to exceed 0.10%. All in all, I think that the Bank of Japan's meeting will certainly matter. It may have a positive impact on the yen, and this is why we are currently seeing dollar yen on the downside here, although US dollar index is trading in the positive territory. So here we will be tracking the levels of support like 114.11, or maybe we can have the Fibonacci retracement of last week's advance to set our downside targets. All in all, the US dollar's ability to gain versus the Japanese yen will depend on the actions of Donald Trump, comments from the Federal Reserve, and the incoming US economic data. I think that the US dollar will decline and test levels in the area of 113.50, 113, but the fate of the American currency will depend on this data from the United States. Trading will be surely volatile because of the lower liquidity, with Chinese markets closed until Wednesday and the US releasing non-farm payrolls on Friday. And the only reason for the yen to strengthen and to make dollar yen go down below 112.50 will be the increase in the market's risk aversion, the substantial increase, if there is no stimulus from Donald Trump and if he makes some aggressive protectionist steps. So otherwise, dollar yen should have a really good support in the area of 112.50. This is a very firm support. We have seen the pair rising for 2 times from this level. So this is a strong support. But if there is a break below this support, then a strong movement to the downside will follow and will target levels around 111 and probably even 109.20. On the upside, you can see perfectly well that there is a significant resistance in the area of 115.50, and we need to get above this level in order to reach the next resistance at 117.50. Also, there is resistance level at 118.60. These are highs of December and early January. But these targets look rather remote, and it is rather difficult for the dollar yen to get higher right now. So I think that the picture for the next session is more to the downside, to the lower border of the current trading range between 115.50 and 112.35. Let's now say a couple of words about commodity currencies, about Australian dollar. On the daily chart, we can see that there is consolidation of the pair. It managed to get above 0.75, but then a time of consolidation came, and we are currently consolidating between 0.75 and 0.76. The pair is moving between the big figures here on the chart. So this is the current trading range. We can see that the daily moving averages are horizontal, and it means that the pair is directed sideways, so that there is no strong trend. MACD indicator is declining on the daily chart, and we'll probably see the pair head towards 0.75. On the 4-hour chart, we can see that the pair is forming lower highs and is consolidating here in the kind of triangle. The odds are that the pair will try to test lower levels, as it is trading below the 50-period moving average, and this may be just a smooth top, which will lead to the pair's decline to the area of 0.7465. There it should have another support, and probably there will be more of this top information for Australian currency. Next, we have US dollar, Canadian dollar currency pair, and here you can see that the dynamics of the pair looks rather strange. The pair breached the support line, which could be traced back to the spring of 2016. Then it went above this line and then returned below this line. So US dollar, Canadian dollar pair is, of course, affected by Trump's protectionist steps. And this week, the Bank of Canada Governor Paulus will deliver his speech. There is a possibility that he will leave the door open for a rate cut amid a large potential negative shocks to Canada's economy. This may weigh on Canadian dollar and allow US dollar to rise higher. Another headwind for Canadian currency is a looming renegotiation of the NAFTA agreement and the introduction of a border adjustment tax, offering a tax relief for the US manufacturers and creating higher charges for important products bought within the United States. On Tuesday, traders will be focused on Canadian monthly GDP, but we don't expect significant gains for Canadian dollar from it. Last month, GDP figures fell out of the market's expectations. Towards the end of the week, we will wait for the US economic releases that might set greenback higher if the data are strong. So all in all, fundamental factors that we've just listed make us believe that the US dollar will rise in the short term. Note that there is resistance located at around 1.32, but as we have noticed, the pair has an ability to just go through this line. So probably the more important resistance will take place in the area closer to 1.33. These are the moving averages are, and the line which connects the recent highs of US dollar, Canadian dollar currency pair. So aim at levels just below 1.33. Support is located at 1.3065, and 1.30 is the big support level. The break of this level will make the bear focus and target 1.28. But I don't think that Canadian dollar will be strong enough to get there. There may be some sources of future strength for Canadian currency, but I don't think that such strength is going to manifest itself during this week. And it is interesting to have a look at the gold chart. We can see that there was a double top for gold, but on Friday there was a hammer candle, and now gold is trying to test higher levels to get higher. However, we can see on the 4-hour chart that the moving averages will provide resistance in the area of 2002, 1202, in the area of 1,200 mark. Here an important psychological level, and as long as gold is below these levels, the chance of reversal to the downside still remain. I think that gold will be able to reach 1,200, but the further fate will largely depend on the actions of the US Federal Reserve, on commands of the US Central Bank, and on the US economic data. Let's have a look at the Fibonacci for gold. We can see that gold has retraced 38.2% of its December-January increase. So it is not much, and the decline may continue to 50% Fibonacci in the area of 1170. So I think that bullish bets on gold should have conservative targets around $1,200 per ounce of gold. And if the gold reverses to the downside from this resistance, then we should target firstly 1180 mark and then 1170 mark. This is my take on the precious metal. And now let's have a review of the currency pairs we talked about today. If we are talking about the US dollar, it should be more or less stable. The currency seems to have ability to test a resistance in the area of 102 for the US dollar index, and the further fate of American currency will depend on its ability to continue its way above 102.00, or if it reverses to the downside, then we'll see a bigger negative picture, a bigger top for the US dollar. If we are talking about the euro, the picture for the euro dollar looks negative. There will be inflation and GDP figures to watch on Tuesday, but technically the pair has breached some important support lines. It has breached a bullish rising wedge, which took place in January, and now the targets lie around 105.50, 105 on the downside. Resistance is located at 107 mark, and increase above this level is necessary for the boost to regain opportunity of growth towards 108, but still technical picture looks rather definite, and we expect the pair to slide to 105.50 level at least. As for the British pound, the pair dipped below 2-week support line and can test lower levels. We will be watching the area of 1.2430. The break below will lead us to 1.23 area, while an ability to regain strength about above 1.2430 will allow the British pound to try to return to 1.2673, 1.269. 115.50 on the upside and 112.50 on the downside. We expect the pair to test levels around 113 in the coming sessions, but we think that support in the area of 112.50 is extremely substantial, so some big fundamental risk negative factors should appear to pull the pair below these support levels. On the upside, increase above 115.50 is necessary to open the way to the next bullish level at 117.50. And for Australian dollar, the pair is trading in range. It is consolidating within the descending triangle. The decline below 0.7518 will open the way down to 0.7465 and probably to 0.74 in the long term. Above 0.7518, the next level to watch will be 0.76. This is the top of the pair's consolidation range, and some strong close above 0.76 will open the way down to 0.77. But all in all, it is difficult to say where Australian dollar will try to go. So I recommend to wait for confirmation. The levels have been discussed. These levels are very important, and if you are trading on the basis of these levels, I think that you should be successful in your trades. This is it for today. I thank you for your attention and will gladly meet you next Monday when we'll discuss these recommendations and the further outlook for Forex market. Thanks a lot. It was a report by Elizaveta Belugina, FBS, and I wish you good luck in your Forex trades and see you next time at FX Trade. Thank you. Goodbye.